Good afternoon, traders, and welcome back to our Hot Stocks Outlook for December 28th, 2018. Hope you all have had a great Christmas, or well rested, ready to begin some trading in the new year of 2019, but some great opportunities here rounding out the end of 2018. So we'll go ahead and start here with, we've got Raytheon, Boston Beer, or Sam Adams there, Amazon, Apple, and round it out with shares of Roku. But starting here with Raytheon, what we have is very, very simple. Some daily bars just over the past 8 or 9 trading days. So each one of these bars represents a complete trading day. So the open, the high, low, and the close. Now, against those daily bars, there's a few indicators here that really round out the entirety of what we'd call the VantagePoint forecast here. Now, right up against that price data, you see that there's a black line there and a blue line. Now, the black line that you see, that is what's referred to as a simple moving average, one of the most common technical indicators you see out there, very easy to calculate, and it acts as a good guide of where prices have already been, right? Very known information by the market. But what we're able to do is compare that value to this blue line. And so for this value to be generated, VantagePoint is utilizing this type of artificial intelligence of neural networks to analyze how other markets are influencing, driving, and impacting shares of Raytheon, and then generates predictive prices that can then be built into these predictive indicators to help you get better gauges and a better judgment of where prices are expected to move going forward. And so once that blue line or that predicted moving average crosses below the actual moving average, well, the trend is to the downside. It's saying that average prices are expected to start moving lower than where they've actually been in the past here. Now, in addition to that predicted moving average, we also have a extremely accurate neural index. And you see this indicator down here at a red for the duration, but you see it can flip up to a green. And that is an extremely accurate 48-hour indicator. So when you understand, hey, I want to get long or short this market, then you need a gauge of, okay, is there short-term strength or weakness in shares over that next 48-hour period? And really to round all this out, you're even given a predicted high and a predicted low before each and every trading day occurs. So for instance, in shares of Raytheon here, you can see that, okay, well, here's where the forecast is saying the trend is now down. We have that weakness over these subsequent 48-hour periods. And then you can use these predicted highs and lows as guides to set limit orders and know exactly where you want to be taking action on the market. And if we go ahead, we can actually bring up those predicted high and low levels against the actual market data. And you see how this works. Now, you're not going to hit those points perfectly every time, but one of the great benefits about this is you see that, the market moves lower here, but we hit this predicted high a few days later, which actually, as far as a overall trend, gives you a great average price to start getting short, a great day trading level to go ahead and take action on the market, and gets you into a nice trending market to the downside here. So really nice move so far in shares of Raytheon, but you've seen a lot of this all over the marketplace. So Raytheon shares down about 10% from when the forecast went to the downside as far as trend, and you see from that predicted level, really great trade. From a day trading perspective, nice little 3% move right there, shorting at the predicted high, targeting the predicted low, and making about $5 per share to the downside there. Now, the markets have been very bearish. There's been a lot of weakness out there, and that's where VantagePoint's done a really good job of forecasting and getting you ahead of a lot of these moves that a lot of them really started back in October. But here we see Boston Beer, a very similar situation, cross over to the downside, neural index at a 0. So you understand that, okay, well, you want to go ahead and get short the market. Now, you will have these periods of time. You see here the neural index comes up to a green value, and you get a couple days of sideways and bullish action, right? You're hitting some higher highs in the price action. But look at the distance between that predicted moving average and the actual moving average. And that's what's letting you know, look, the trend is down. Stick to your gun, stick to that directional bias, and remain short or buy put options or sell calls, however you want to approach it. And again, you get that guidance of those predicted highs and lows to let you know not only the trend direction and strength or weakness over the next couple of days, but where should I be looking to actually take action on the market? And you see, okay, well, if you're shorting at this level, great time to short. You don't want to chase this market down. You can short up at these predicted highs. And you can use these as a guide to line up with your trading style or approach, right? So if you're a shorter term day trader, you're going to look towards these predicted highs and lows to take that piece out of the market. If you're a longer term trader, there's tremendous benefits from taking a swing trade, getting involved in the market and then using those profits that you've made off those initial trades to add to the position as the trend continues. So really great opportunities from a day trading perspective to be making money, day after day or, every couple of days. But you want to make sure that you're shorting over this 18% decline in the market. So whether you catch that 18% or a few percent here, a few percent there, because you're shorter term, doesn't really matter much. But the approach is still the same: is get that trend direction, understand what that short-term strength or weakness will come into the market, but have that really superior guidance of this technology to guide you and say, okay, well, where should I actually be taking action on the market? Should I be buying? Should I be selling at these intraday prices or level? Here's Amazon, which we covered last week. Great opportunity in the options market. A lot of volume in the options here for Amazon, but very clearly suggesting, look, crossover to the downside, neural index at a 0, we get this short-term amount of strength, but look at the distance between those levels. Still saying, look, you want to remain short the market here. And over the past couple weeks here in Amazon, again, if you're doing some of that trade management, look at these opportunities to come in and short and be taking profit at these levels. So really great opportunity here. We get a lot of volatility here, with this day in between the holiday. But the theme here is still the same in that the markets are trending lower. The overall trend has been down, and there's been a lot of money to be made to the downside over really this holiday period. Really, again, since October, you've seen a lot of this weakness. Now, here's shares of Apple, and we can see this very clearly on the chart here for Apple. This is when the markets really started having trouble. You see this crossover to the downside in Apple, neural index at a 0. Just over the duration, over the past 3 months now, that predicted moving average remaining below the actual moving average. And of course, we can then come in with those predicted levels and then have a guide of how do we want to be trading over the past 3 months in shares of Apple. Well, you want to be shorting at predicted highs, selling calls, buying put options, but all you should be really looking to do is, again, short from these predicted levels that are provided from the software. So over the past 3 months, just a tremendous move here in shares of Apple. But let's see over the duration how much of a move this is in entirety. 30% decline here in just the past few months. So all over the markets, we saw this weakness in October. But of course, like I mentioned, as a trend trader, you can short the market, use those profits to remain short, and even be adding into your position at the predicted highs. So you really get the best or even more of this 30% as you're taking profits at the right levels and reshorting at higher prices. Lastly here, shares of Roku. And this is, some of these markets can get really, really intense when you see this sort of volatility in the S&P 500. But very clearly here, you see at the beginning of December, about as clear as day, we have weakness, weakness, weakness in shares of Roku. Do not get caught going long this market. But getting short's a little tricky, right? You don't want to just jump into the market. You can get these, big sort of retracements and a lot of volatility, and you want to make sure that you get that best price possible so you don't have to run these gigantic stops and large amounts of risk to take these trades. And you see, okay, well, how's this work in shares of Roku? Well, you see how this software adapts to really guide you down with this market. It takes a little while, but we get this short predicted high hit there. But the overall trend very much here to the downside, and a great opportunity to be short, buy some put options, however you want to approach the market. You see this market down about 20% since that crossover came through, and that's even with that huge bump in shares we got with a 6% up move. But the reality here is, even despite that 6% move, we still have big separation between these moving averages. And the fact is, you recognize these trends moving down at the beginning of December, mid-December, all the way back towards October. And now you're just continuing those trending moves. So really exciting opportunities all throughout the markets. You see, Apple down 30%, Roku down 20%. And this is in a very short period of time where if you can go short the markets or buy some put options, there's a lot of money to be made with this sort of volatility. So have a great holiday, get some rest, and really excited about this new year, 2019, and the VantagePoint software. Once again, this has been our Hot Stocks Outlook for December 28th, 2018. The year absolutely flew by. Have a great weekend. Enjoy the markets. Thanks again, and bye for now.